Gold has always held a certain mystique. Its allure has captivated civilizations for millennia, from the pharaohs of ancient Egypt to the emperors of Rome. For centuries it has been a symbol of wealth, power and stability. Kings and queens adorned themselves with it, and it was used to forge alliances and seal treaties. Now, in 2025, gold is experiencing a resurgence. This ancient asset is finding new relevance in our modern financial systems. Prices are soaring, recently surpassing the $3,000 mark. This remarkable rise has caught the attention of investors worldwide. This surge is driven by powerful forces reshaping the global financial landscape. Economic uncertainties and geopolitical tensions are pushing investors towards gold. Investors are flocking to gold as a safe haven and a store of value. In times of crisis, gold has always been a reliable refuge. Analysts predict a continued upward trajectory for gold. They believe that the current economic climate will sustain this growth. Some suggest a target of $4,000 per ounce by 2026. This optimistic forecast is based on current trends and future projections. This bullish outlook is based on geopolitical tensions and economic anxieties. As global uncertainties rise, so does the demand for gold. The world is changing, and gold is well positioned to benefit. In an era of digital currencies and economic shifts, gold remains a tangible and trusted asset. We will explore the factors driving gold's rise and its appeal across different regions. From mining operations to market dynamics, every aspect plays a crucial role. Can gold reach $4,000 by 2026? And what are the potential risks and rewards? Join us as we delve into the future of this ancient asset. The world is a volatile place, filled with uncertainties and unexpected events that can shake the foundations of economies. From the ongoing conflict in Ukraine to rising tensions in the Middle East, geopolitical instability is a constant threat that looms over us. These conflicts and tensions create an environment of uncertainty, making it difficult for investors to predict market movements. This uncertainty weighs heavily on the global economy, causing investors to seek safe havens where their investments can be protected from volatility. Gold, with its long history as a haven asset, is a natural choice for those looking to safeguard their wealth. When geopolitical tensions rise, investors often flee riskier assets like stocks and bonds, seeking refuge in more stable investments. They move their money into assets perceived as safe and stable, and gold has always been at the top of that list. Gold has always played this role, serving as a reliable store of value throughout history. It is a tangible asset, not directly tied to any government or economy, making it a universal standard of wealth. The current geopolitical climate, with its numerous conflicts and uncertainties, is particularly favorable for gold. These factors are driving investors towards the security and stability of gold, reinforcing its status as a safe haven in turbulent times. The global economy is facing strong headwinds. Inflation remains stubbornly high, eroding purchasing power. Interest rates are rising, increasing borrowing costs. Supply chains are struggling to keep up with demand. These factors have led to growing fears of a recession. In times of economic uncertainty, gold shines. It is a classic safe haven asset, often referred to as a crisis commodity. The current economic climate is creating a perfect storm for gold. Central banks are making significant moves that bolster the case for gold. After years of selling off gold reserves, central banks have become net buyers. This shift in strategy is a clear signal. They are diversifying their reserves. For decades, the US dollar has reigned supreme as the world's reserve currency. However, recent geopolitical events have led some countries to question the dollar's stability. As a result, they are looking for alternative reserve assets, and gold is a natural choice. This trend reflects a growing concern about the long-term stability of the US dollar. This shift towards gold by central banks adds further upward pressure on prices. The appeal of gold transcends borders and economic systems. It holds value in both stable and volatile economies. In stable economies like Oman, gold serves as a store of value and a hedge against inflation. Omani investors view gold as a way to preserve their wealth. In volatile regions like Yemen, gold takes on an even more critical role. It becomes a lifeline, a safe haven in the truest sense. Yemenis turn to gold as a stable and reliable form of currency. This dual nature of gold makes it a uniquely attractive investment in today's uncertain world. The rise of cryptocurrencies has captivated a new generation of investors. These investors are drawn to the decentralized nature and potential for high returns. While crypto holds promise, it is also highly volatile. This is where gold enters the picture, not as a competitor, but as a complementary asset. Savvy investors are recognizing the wisdom of diversifying their portfolios. This approach allows them to participate in digital assets while mitigating risks. The combination of gold and cryptocurrency is particularly appealing to younger investors. By combining gold investment with cryptocurrency, these investors are navigating the complex landscape of global finance. The bullish sentiment surrounding gold is palpable. Investors are increasingly looking at gold as a safe haven asset, especially in times of economic turbulence and market volatility. The precious metal has always been a go-to for those seeking stability. Prices have surged past the $3,000 mark, a significant milestone that has caught the attention of both seasoned investors and newcomers alike. This surge is driven by a combination of factors including inflation fears and currency devaluation. Some analysts predict a run towards $4,000 per ounce by 2026. This prediction is based on current trends and market conditions, which suggest a continued upward trajectory for gold prices. This optimistic outlook is based on several factors, including geopolitical instability and economic uncertainty. Events such as trade wars, political unrest, and global pandemics can drive investors towards gold as a secure investment. While the case for gold is strong, it is essential to approach any investment with a balanced perspective. Diversification remains key, and investors should consider a mix of assets to mitigate risks. The price of gold can be volatile, influenced by various factors such as changes in interest rates, government policies, and shifts in investor sentiment. It's crucial to stay informed and be prepared for potential fluctuations. Despite these risks, the long-term outlook for gold remains positive. Historically, gold has shown resilience and an ability to recover from downturns, making it a reliable long-term investment. While reaching $4,000 in 2026 is ambitious, it is not outside the realm of possibility given the current market dynamics. Investors should keep an eye on market trends and be ready to adapt their strategy